The stock market is hitting all-time highs, and it can be a scary time, especially if you are a beginning investor. I still consider myself to be a beginning investor. You don't want to invest into the stock market and then have it plummet the absolute next day. So if you're not a veteran investor, it can be a scary time, especially if you don't have that mindset of no matter what happens, I'm going to consistently invest every single week. So let me show you the 3 stocks that I'm going to continue to buy, even if the market seems overpriced at the moment, and even if it continues to go up in price. But before we get into that, don't forget to subscribe to the channel if you have not already. Leave a like on the video because it does help with the growth of my channel tremendously. And then tell me down below in the comment section what stocks you're going to buy, even if the market seems overpriced. Really quickly, let's go over my portfolio value. As you can see on the day, I am actually up $238.88 or 0.86%. On the week, I'm actually down $3.34 or 0.01%. On the 1 month, I am up $452.73 or 1.64%. On the 3 months, we are up $2,015.11 or 7.75%. Year to date, we're up $601 or about 2.19%. On the last year, we're up $2,435.10 or about 9.52%. And then on the all-time, we're up $5,247.77 or 23.05%. If you're seeing my channel for the very first time, this is my portfolio that I have built over the past 3 years. So 23% is not a bad return, but it could definitely be better. You live and you learn, and even though the stock market is very overpriced right now or seems overpriced, I still want to invest consistently every single week. An honorable mention outside of the 3 stocks that I'm going to continue to buy is VOO. This is because if you consistently invest into something as little as the broad market index fund, which is represented by Vanguard right here in VOO, historically speaking, you will end up better than 99% of portfolios out there, including mine. The reason I don't invest into VOO specifically is because they have a low dividend yield. I want a more aggressive dividend portfolio. I am more focused on passive income or dividend stocks, and obviously growth is a side effect from that. But the 2 things to highlight again is the dividend yield. VOO is at a 1.0 something percent dividend yield, and the expense ratio is 0.03%, which for those that don't know, that's pretty good. That means for every $1,000 that you put into this portfolio or this ETF, you are going to be paying 30 cents. That's how much it costs to run and operate this ETF. The reason that the target number for an expense ratio is 0.03% is because of VOO. They literally set the standard for most anything in the stock market because it's the S&P 500, a stock with very similar stats. And the first stock that I'm going to continue investing into, even though the stock market is overpriced right now, is going to be SCHD. SCHD's expense ratio is 0.06%, meaning for every $1,000 that I put in, it's going to cost me 60 cents to run this ETF. But their dividend yield is at a 3.53%. So it more than makes up for that extra 30 cents that you are spending to run and operate this ETF. And the awesome thing about SCHD is that it is a more aggressive dividend ETF, meaning that it follows the S&P 500 very closely, but it also gives you that amazing dividend yield at a lower expense ratio, or just a little bit more of an expense ratio compared to other broad market index funds. You can see this by the way that it matches VOO in almost every single year that it has performed since it has operated. So in my opinion, it's worth that 30 extra cents. And the crazy thing is it's on sale right now, or at least what I consider to be on sale. If you go to the last year of the performance of SCHD, it's about break even with how it performed this time last year. So that means that you have the opportunity to buy into SCHD at the same exact price as it was last year. This rarely happens for SCHD, and over the past 5 years, you've only had 2 opportunities to do this. So for me, it's a no-brainer to buy into SCHD right now. The second dividend stock that I'm going to continue to buy even when the market is going up is going to be Pepsi. This is a more aggressive individual stock, but the reason I feel completely comfortable investing into Pepsi as an individual stock is because they're a dividend aristocrat. Well, soon to be. As far as I know and the information available online, they have been paying and increasing their dividend yield for 20 years. That means they're only 5 years away from being dividend aristocrats, which from a dividend investor standpoint is amazing. The interesting thing about Pepsi is that they're already on some dividend king lists, which means they have been paying and increasing their dividend yields for 50 plus years. But whenever I go to find that information online, for some reason I can't find it. So even if it's not a dividend king, it's close to being a dividend aristocrat. And obviously it's a great stock because it is in the S&P 500. Now don't get me wrong, I am taking the risk on investing into Pepsi individually, but if you go to the last year of Pepsi, again, it is down just like SCHD is down, or about break even, which means that you can get into this stock for the same price you could this time last year, which if you go to the last 5 years of Pepsi has only happened 2 times. Actually, it's only happened 3 times in the past 5 years. So a good opportunity to invest into a dividend aristocrat or a dividend king Let me know in the comments which one it is, because again, I get like 3 different answers online. Some say it's not even 20 years, some say 25 years, and some say 50 plus years. But an amazing chance to buy into Pepsi. I already have a lot of Coke stock right now. That's why I'm not investing anymore into Coke. I just think Pepsi is the better buy right now, especially with the stock market going up. It's one of the stocks that I don't think is overpriced. Now, the third and final stock that I'm going to continue buying over the next couple of weeks while the market is continuing to go up is Realty Income. This is another dividend aristocrat that has recently been going lower or down in value over the past couple of months, actually. I've been buying Realty Income or more of Realty Income over the past like 4 or 5 months. But if we hop into Realty Income, we can really see that over the past 5 years, there's actually been like 3 or 4 chances to buy at the same price that it was about 5 years ago, which some people can look at as bad or some people can look at as good. Again, it kind of is up to your tolerance and how experienced you are in the market. If you look at the past 5 years, they're actually down $15 or about 23% where they were 5 years ago, which is kind of crazy. But I think personally, because they are a dividend aristocrat, they are going to go up and they are going to catch their stride soon. I just personally think that the interest rates and the commercial real estate that they invest in right now are just not doing so hot. But I do still think they are an amazing buy because eventually they will get back to their fair market value, which I think they're undervalued right now. But again, it is a lot more tolerance to have in the market. I've only been investing for 3 years. And this is me looking at the big picture. It may or may not come back, but I'm betting that it is going to come back. So that's why I'm investing into it right now. Again, because they are a dividend aristocrat, they have more incentive to continue to push back up. But they're an amazing REIT that has a pretty good dividend yield at about 5.9%. So they are on the more aggressive side, but by slowing down their dividend payout just a little bit, by putting more money back into themselves, they can still afford to increase their dividend ever so slightly to keep their dividend aristocrat status while also investing back into themselves. Again, this is just my tolerance and what I feel like is going to be good for my portfolio and it's going to be good in the market in a couple of years. Now, besides SCHD, Pepsi, and Realty Income, I'm not looking at investing any more money into my portfolio specifically or any more stocks, but I am really interested in seeing what you guys think. So let me know in the comments what you are buying, what you're staying away from, especially right now because the market is hitting all-time highs. But something that I have learned in the past 3 years of experience investing is that you have to consistently invest into the market. After just 1 year of investing, I watched my portfolio go from above $3,000 all the way down to negative $1,000 and then back up. But the only reason that I was able to come back up was because I believed in my portfolio long term and I continued to invest and reinvest during the time when I was negative. Instead of being scared and looking at it as a time to get out of the market, I doubled down and I actually invested into stocks that I know were going to be good long term. And I got more stocks for a cheaper price, which actually gave me more passive income. So even if I were to wake up to the market tomorrow being tanked, I would not be scared or I'd not be afraid. And if the market goes down, I can just buy more stocks at a cheaper price, especially the stocks that I truly believe in. But again, let me know in the comments what stocks you're buying or you're staying away from. Don't forget to subscribe to the channel if you have not already, and then leave a like because it does help out the growth of my channel tremendously. I'll catch you guys later. Peace.